How it started, how it's going, why the NASDAQ, bond market, and biggest companies in the world are in free fall. Let's get to it. Let's start with what happened. The Federal Reserve lowered interest rates by 25 basis points. This was expected to happen. They did hit a few cuts, which we knew was going to happen. Now, what happens every quarter is we get a dot plot. And a dot plot refers to what every Fed member participant assessment of the appropriate monetary action. Where do they see the Fed? So over here to the left is September, and then over here to the right is December. And then we can see this 4% line, which is what we're going to use as our demarcation. And what we can see is that very few people thought 25 that you were going to be near there. And now you've added two more people that would say that you're going to be up in that range. And then what you're seeing is even going out further and further to 27, you're seeing that, and you're watching 25 move from that 4.25 to 4.5 from where you were all the way up here. And you're seeing that drop as well from the 25. Now, as you were going lower and you had more people around that 3% level, if you look at 3% here, you can see they have all but gone away. Okay? And now, where are they? Once you see that, so they were all down here, all saying this is where we're going, and you can see all those people, but one is there. So think about it this way, and this is the easiest way to look at it. Say they all thought monetary policy or that the monetary rate was going to be 3% or lower. Okay? So at last September in 2025 or 2026, does not matter, but we'll take 2026 going out. And you would say that all these people saw rates at 3% or lower, because that's how they vote, by a little dot, hence the word dot plot. And then you come into December and say all these people changed their mind, and now there's three of them that think that in 26 you are below 3%. That tells you exactly what you think it does, that they think rates are going higher or that they're done cutting. And so when you start factoring that in, the probability of rates going lower changes. That's not really one of the issues why we sold off. There's two major reasons. We sold off because of a couple other data points, but we really sold off based upon the speech, and we'll get to that. But just remember, every quarter you get a dot plot. What the bond market wants to see is they want to see these moving down. They don't want to see them moving up. Now, in front of you are the odds of what is going to happen. In other words, do we have a cut coming in January or do we not have a cut coming in January? And you can see there is a 91.4% chance that you are going to be at 450 to 475. And you can see that that 450, 475 is 91.4, and a day earlier it was 1.7%. So this obviously has changed drastically. 425 to 450, 8% that you see a cut now, meaning if you take everything below the current, and this is where your current is, there's only an 8% chance of a rate cut. As of the 17th, there was an 81% chance of one cut and a 16.7% chance of another. Now take a look at March. March has the target rate at 450, 475, and they're saying there is a 56.7% chance that we're going to stay exactly where we are, and there is a 40% chance of one and a 3.2% chance of another, versus where you were yesterday when by 4.25, this 3.2 was actually 50%. So everything's skewed, and the question is, why are we doing that? Quite frankly, he was asked repeatedly about why are you even cutting rates, and he didn't have a good answer. We'll get into the speech. But before we even get into the speech, one of the things that I think we should focus on is what they do with this dot plot. And I talked about this yesterday. Summary of economic projections is what they call it. What you're seeing here is December is standing up. September is where they were. So when you look at the unemployment rate in September, you can see how they were skewed, and then you can see where they are with December. So here's September's projection. They saw it out this way. December projection is here. 25, September skewed, December here. 26, skewed versus where they are. This becomes in and of itself more of an issue because what they're suggesting is, okay, the labor market seems fairly steady is where they're going with it. In other words, September was more spread out. December is, no, this is where we are, that 4.2, 4.3. So what they're telling us, because you're not over here anymore, what they're telling us about 25 going forward is they're shifting, and they're shifting in a way that's more of a conglomerate in an area versus more spread out. This in and of itself is pretty interesting for them saying that they're not going to cut rates. One of the things on the speech that was most confusing was just, why are you even doing what you're doing? And candidly, he used language like, well, it was a close call. We didn't know if we were going to do it this time. And they kept repeating the question saying, well, why did you do it then? And he never really gave an answer. And that's when we started to see weakness. A lot of weakness on two different areas developed. This timing is really important. And I like how they broke it out by time, by question. And what he did was he stepped on a landmine. So this added to the selling, hands down. He started getting asked about Trump's policies and tariffs. And where you're going to see is he's addressing the policy. He said some members factored in policy changes into their economic projections, while others did not. He added that policy uncertainty is another reason for the Fed to go slowly, that potentially a big deal leans against the cut to the start. Powell's talking tariffs. 2018 analysis suggests policymakers could look through a one-time rise in tariffs. Fed set committee done a big good of work, blah, blah, blah. It's called very premature to draw a conclusion regarding tariffs. We don't know. The minimum inflationary 2018-19 tariffs could model how they may affect prices in 25 or later. That's called because the U.S. has just been through a rough period of inflation. The issue with this is that this never should have been addressed. He never should have talked about policy that's not even. But he stepped on a landmine, and then as soon as he started asking, last time he diverted these questions, he wouldn't even ask them. This time he just stepped in it. And when he stepped in it, they just kept firing the questions at him, and you could see what happened to the market. Let's take a look. Now, if we just mark off the key events for a moment, which I think is the greatest way of doing this, we can see the 2 o'clock level. The Fed hits, they start going through everything. And then we're going to get to that 2:30 level, which is right here, right when Fed speaker or Fed chair Powell starts. And that's that level right there, which we would now call the Bad Santa rally. And one of the key issues that we're seeing here, tries, breaks. This break, retest. And the reason that I want to show this is I want to show you what time this happened, which is exactly at this 2:51. Reuters did a really good job of breaking this down. And what I want to show you is it's his comments that actually drove us down more than anything. Now, he made 2 really bad comments, and we'll address this. But you're down about 1%. And then he starts talking about tariffs and everything else. And that's when they just started picking them apart. And you can see from there, from that statement on, you lost another 2.6%. I think that's really very important for people to wrap their noodle around. Because the question becomes, was there an overreaction today or was there not? You look at this chart technically, and this is why we love the stool so much, right? And for those that don't know, we look at the world from a macro, from a fundamental position, and also from a technical position. And that gives us a stool. And then if you're at the bar, sometimes you lean on the front leg, sometimes you lean on the back. Today, we were at Itchy's bar and we were drinking from the tap. And that's exactly what we got. So this was the statement, and this is how he answered it. 2:51. He added policy uncertainty is another reason for the Fed to go slowly. So we went through this in a little bit of detail, but I really want to point this out. He said some members factored in possible policies and economic projections. So we're putting into place our own beliefs on something that has not happened yet, and then we're putting that into policy. That's an issue. That's a real issue, because things that have not happened yet, you're saying that this is what's going to happen, and you don't have any data. And I'm going to explain why this scares people, because this shows it being politicized. In other words, their job is to take this data, make sure that we don't have inflation, make sure that we have employment. That's it. Stability and employment. That's their dual mandate. He said it over and over again. Nowhere in their mandate is we need to figure out what Trump's doing. That's not their mandate. And they didn't go back 4 years ago and said, we need to figure out what Biden's doing. So now at this level of it, as soon as he said that, he opened up the door. If you watch this call from after 2:51, that's when you started to see issues, and you can see it in the tape. And to be clear, you can make fun of my stool, but I still like doing it, even though people send me memes all the time. So that's the point that I want you to understand. It was that statement that set us off, and that statement saw this happen, because what we're doing now is we're getting political. We're overlaying the Fed and the Fed's statements into what they think policy might be. They have no idea how policy is going to affect anything. If they knew what they were doing, we never would have had what happened with the pandemic, right? We never would have had them inject 1.7 trillion in the market. So the idea that they're going to go out there now and pick things is a bit of a pickle. And that was when we just started falling off, and they just said, we're getting out of everything. And it doesn't matter the name, anything high beta, they just blew out of. And you can see some of this stuff they're trying to fight after hours and bounce. Whether it does or does not remains to be seen. And there's some of these names that we'll go through. And you have some data after hours that's kind of bonking us around, and we'll get to that. But at the end of the day, I think you have to understand exactly what's transpiring here. And what's transpiring here is they kind of threw a wrench in the ointment. Now, Itchy's gaffe number 2, Fed Chair Chair Powell says the central bank is not looking to add Bitcoin to its balance sheet. We're not allowed to own Bitcoin. The Federal Reserve says that we can own, only not looking for a law change. That kind of thing is for Congress to consider. We are not looking for a law change at the Fed. President-elect embraced crypto during his campaign, entertained the idea of potential strategic reserve. What he should say is that we have to do whatever Congress tells us that we're doing. Okay, whatever the law is, not we're not allowed. Okay, that's very different. The language that this guy chose today was very specific, and I'm not really sure why he did it. We can all put a tinfoil hat on to some extent, but this language, it's very interesting. So 1 minute you're saying it's digital gold, and the next minute you're saying we're not looking for a law change at the Fed. Yes, you don't look for law changes at the Fed. That's not your job. It's Congress's job, and it should be phrased that way. What should be said is we're going to do whatever Congress tells us the law is for us to do. Very specific language. So this sent crypto into a tailspin. You can literally look at these moves in Bitcoin and these breaks, and you can see from where those breaks started, and you can see and go look at the questions and go back at the Q&A on where this questioning was. It was probably one of he's had some really bad press conferences, but this has to be one of his worst. And since then, we just saw a complete collapse. As a matter of fact, I don't think we've ever had a Fed since he's been up where we lost $1.5 trillion in a session due to him. Not Bitcoin, but in the market. That's how much we lost. That's how fast it dropped by his statement. So if you want to wrap your noodle around how bad it was, that's how bad it was today. Now that statement, this is what happened with it. Whether we see a bounce in these names or we don't see a bounce in this name or these names, anyone knows, and we can all debate, should they bounce, should they not bounce? I think what's important about some of these is to look at some of the levels and we can see them. For example, you can see that 336, that held. Now, does that continue to hold? Did you break the 55? No, but you have a 12 and a 22 and they're pointing down. Could you get to a 3 handle? Yeah, it might not be the worst thing in the world to get to that 3 handle. I think what we really need to do is figure out what's going to be the driver and how much of this was overdone by his statements. How much are the institutions going to go back and process what was said? We can look at some of the breadth and figure that out and then get into a couple names, which I think you need to watch tomorrow. But let's start with the breadth, because we were talking about this yesterday, and then you can see how this is all kind of connected. Well, not kind of connected, it's all connected. So, and I think it's good to understand how bad this. There are certain things here, and when this happens, we do tend to find some kind of bounce. It's gross, but it does tend to lead to a bounce eventually. And you're like, thanks, Rocky, that's helpful. Well, the bottom line is you're on the tail end of it before you bounce, and I'll walk through it. So for example, if you look at stocks and the 5-day average, you're at a 2 today. That's really low. Usually a 4 is a short-term bounce. If you take a look at stocks under the 20-day moving average, you're at an 8. This is a trough level. So for time's sake, what I'm going to do is I just want to mark this stuff off for you guys so that you can see it. So you're going to remember April 16th right here, and you can see April 16th here as well. That was the last time both of those were at the same level. And then what you're going to see here is April 16th, and you were at a 26. You're at an 18. Now, to get to an 18 or any of these levels, you'd have to go to like October or lower. You'd really have to go to that October 23rd, 2023 level where you're getting a 9 kind of reading. And when you start to see that, or even when the S&P 500 on the 200-day is below 50, you want to take a look at it. So if we go and click these levels and say, okay, well, can we go lower? You can always go lower. In October, we went to 23, and you can, if you go back to this, you'll see some of these other readings. They were nowhere near as bad as this was, right? But when you start having the short-term indicators aligned with the medium-term indicators, and you start marking off those data points like you would here, where you have the 5, the 20, and then you also have the 50, and then you look at where you are here on the 200, you want to pay attention to the specific time, and the closest time that we have to this is going to be that mid-April. Let's go take a look at the market. Now, to use the technical term on what this is disgusting. There's no other way to say it. Like, this is just gross, right? This is just straight down, pure panic. Bunch of people can't believe he said what he said. And what did you do? You broke the 55. I use a 12, a 22, and a 55. When you break the 55, you have 3 to 5 days to get above it. If you can't do it in that period of time, then that becomes the new trend. You can see it here, 1, 2, 3, 4, right? 1, 2, 3, 4, 5, and then you stayed under it. Even though this was based upon what happened with Japan, same thing, 1, 2, 3, 4, 5, and you're back over it. And then under it, and you can see how painful that was. And that takes us to where we're at. So even though we have this, and I really want to hammer this point home. So what we're going to do is we're going to take off the 22 before we get into this. And I still want to go through some of these names and what they're doing after hours, which ones are bouncing, which ones are not. And what I want to do is I just want to mark this off so you can see exactly how similar this situation is. Because to me, it's pretty similar, and I think it's worth paying attention to. So if you can see this right in this area, you see April, and we went and we showed all those other dimensions. That's kind of the volume where you were, right in here. You see how you kept trading down? So it's not one of these things like, oh, we're going to bounce and everything's going to be fine. No, that's not what I'm saying. I'm saying that you're going to start developing a turn. Does that happen in the next 8 trading days? Do we have that Santa rally, or not? Or is it like that Billy Bob Thornton movie? I don't know yet, guys. We're gonna find out together. I love when we can do stuff together. But right now you have a bar that is hideous. What we would want from a technical standpoint is a gap down, sheer panic, and then buying. What I don't want is to gap up and everyone's like, oh, everything's fine. Everything will not be fine, and then they'll come in and they'll net sell again to get their costs down. That's not where we want to be. And we're watching some of that maneuvering after hours. Now, after hours, we did have some news on some of these names, and some of them are not doing too well. Micron's down considerably, and the call's going on at the time of recording this, and we're going to go through that, and I think it's important. But there's some things that you really need to wrap your noodle around when you look at this. Like, for example, this is the VIX. And if we take a look at the VIX, we're going to see this spike to 27, and everyone's going to go, oh, well, that's clearly, it's clearly over. Well, is it? Well, here in April, we were here. So can we go lower than this because of where we are? Yeah, you can. There is some relative performance here that's indicative of that, but there's another way to look at this too. You can look at the short-term market, which will be right here, and you can see how that's lifting. And then you can look at the longer-term market as well. For me, the biggest thing that I'm going to take from this, no matter how you look at this and which way you want to look at it, looking at this, it's got more pain. You would look at this and not think that the pain is over. That's the best way that I could explain it and save us a bunch of time. I think you need to see another higher high here. I think you need to see more. This was a big selling event. And the idea that it's going to be over in a day without touching that 500, I don't know. I'm having a tough time believing it. Could it be? Yeah, you're pretty oversold, but that stuff takes time. So we have to let it develop and then go from there. The other issue you're going to have is tonight, Micron's actually blowing up. Cash flow was off considerably and the stock's down. The call's going on now. I was really surprised by this because I thought that you might see more here because of Apple ramping up. I thought that you might see more. So Apple might have an issue tomorrow. Dell, of course, is going to have an issue. In my opinion, I'm surprised that the name's actually up. Micron DRAM was supposed to be one of the drivers of AI PCs. We're not seeing that. So there's some moving parts to this, and we're going to have to see how it plays out. The other thing that I would watch is it's not NVIDIA anymore. I'm going to take off I'm going to leave my 500 levels in, and I'll show you why. So what I want to show is this, and we're going to make this a bear chart. So what's interesting to me is we sold down, we held the 28 level, and we're trying to flip the 45 level here. This is where you're at. You're going to want to watch that 62.82 tomorrow. But look what's going on here. You bounced, and they got you back to that neckline break. You can't get over it after hours. And the reason I'm even watching after hours is you're moving about 200,000 after hours. I mean, you're moving pretty hot after hours. It's not like it's a small amount of money. So 200,000 shares every 5 minutes after hours for any name after hours that doesn't have earnings. So we're going to want to watch this tomorrow. I'm not going to get into the indexes. Of course, they all look like disasters. You are oversold. We'll see how they can try to put lipstick on this pig tomorrow and go from there. Have a good night. That's it.